Well, welcome and good morning or good afternoon, depending on where you are in the country. My name is Robert Wulff. I'm a principal at Griffith Hack, and it's my great pleasure to welcome you here today and to host this webinar. Just the traditional welcome to country. I'd like to acknowledge the traditional custodians of the lands on which we stand, wherever you may be in Australia. We pay our respects to elders past, present and emerging, and a special welcome to any Aboriginal or Torres Strait Islanders that may be in attendance today. It's my great pleasure and privilege to introduce today from Grant Thornton, Sandra Boswell, Rebecca Iwanuscha and Amy Jackson from their National Tax R&D Specialist team. Just a little brief background on each. So Sandra or Sandy, as she's known, is a partner in the National Tax R&D team. She's got more than 20 years experience in the industry, specialises in R&D tax incentives and government programs, and she has experience beyond Australia as well. She's worked with some great companies, including a former company of ours, Glasshouse Advisory. And, she's also consulted and been engaged with the government on helping set the agenda in this area. Rebecca Iwanuscha, who's a director at Grant Thornton, is also in their R&D tax team. She's got more than 8 years experience working across a whole range of industries and company sizes, and was very experienced in helping companies access the R&D tax incentive. Amy Jackson, who is also with Glasshouse Advisory, helps businesses from startups to ASX listed companies. She's a senior associate in the team, and she's got qualifications in both business and law. So this gives her a unique perspective on the whole R&D tax program. So we've got great, as I say, great panelists here today, and hopefully some very good insights into the federal government's recent initiatives as announced in the most recent budget. I'm going to be interviewing Sandy, Beck and Amy today, and we're going to cover off on the following topics. How is the federal government investing in manufacturing? Are they bringing manufacturing back to Australia? Let's hope so. The COVID, as you know, the COVID pandemic really exposed how reliant we've become on offshoring our manufacturing. So hopefully these initiatives will stimulate some return of manufacturing to Australia. They'll look at the current position of the R&D tax incentive, what grants and funding are available for manufacturers, and we'll also just touch briefly on some IP considerations. So without further ado, I'm going to pose my first question to Sandy. Sandy, do you think the government has more appetite for investing in manufacturing?
Well, before I answer that, I want to say a big thank you for hosting us today. It's great to be here, and I think for both Amy and myself, it's good to be back because we're obviously part of the IPH group and have worked with some of these clients in the past. So I think the synergies between innovation of what Griffith Hack does and what Grant Thornton are doing is now really closely aligned. So that's why we've come together today to have a broader based discussion, not just around R&D compliance, but more broadly about what's happening with innovation in the economy here in Australia. So we did see that there's some of you from all sorts of sectors that have joined us today, which is fantastic, including both the university and the private sector. So we'll cover off on a few things and issues and our perspectives on those sectors and the impact that we've seen. But to go back to your question, do I think the government has an appetite in supporting and investing in manufacturing? Absolutely. There's no doubt in my mind that COVID has absolutely shown the Australian economy must continue to support and invest in manufacturing in our local economy, despite the costs and the challenges that it creates being an advanced economy. So what does that mean for us? And I think what we saw, there's been a lot of debate about how do we support business and investment, and what's the government's role in that, and what's the public sector's role? And this has been an ongoing debate really since about December 2015. So we've been involved in that debate And when I was with Glasshouse, part of the Griffith Hack family, we continued working on that, and now at Grant Thornton we still do. And the reason being is because the government really, I think, has a challenge around where to put the, and rightly so, economies are tight. We want to make sure we're investing in the right spots. And also, how do you pick winners? But of course, we now know in the last 6 to 8 months what we've seen with COVID. Unbelievable, really big stresses on supply chain, big stresses on our PPE, for example, on our medical sector, and then the whole overarching global recession that has, cascaded out of this sort of medical crisis. So what's quite scary for us is all of that. But what the federal government has done is really, I think, since 2015, when it was being debated about how much support do they actively provide to business in particular, they introduced in the federal budget this year, after listening, I think, to feedback. So we had 2015, they reviewed the R&D Tax Incentive policy. They continue to do that over 18, over 19. It went to Senate estimate hearing committees. In fact, I gave evidence at one in July around the importance of investing in innovation in Australia. And thankfully, I think the government both heard that feedback from business and they saw the need as to what COVID had created. So the example in the federal budget is what they have done, and it has brought innovation front and the economy, which is really exciting for tax people like Beck, Amy and I. Well, we're sort of tax people, but it is really exciting for us. And we've just popped up some headings there which are really interesting, just their newspaper headings that really, and you can see they're sort of focused on the food and beverage sector just as an example. But you can see one of these is recession is a time for innovation. Now, that's an old heading. But what we see is disruption creates opportunity. And for the first time, we've seen a really groundbreaking budget. It's going to be a once-in-a-lifetime budget that came out in October this year. It was historical, and if you're not across it, really it was about resetting the economy post-COVID. So how do we get out of this? And the government made a very clear indication that they've got confidence in our sectors here and confidence in the R&D tax incentive, and they've given it some certainty. I'm going to cover off today on what that is, but we're also going to talk about the broader sort of support for manufacturing, which is fantastic. But I think if you think back to the last recession, I've used this example loads, and poor old Beck said this many times, but what came out of the last recession was a lot of companies started. So, for us oldies, 08, 09, Uber started, Airbnb started, WhatsApp, and for those renovation enthusiasts, Pinterest. Now, all of these are everyday things, but they're all startups in 08, 09. So what's going to come out? There will be opportunities that come out of this. And thankfully and pleasingly, the Australian government has really said, yes, we want to back investing in manufacturing, but more broadly innovation in Australia, which I think is fantastic.
Thanks, Sandy. You mentioned picking winners. Has the government picked winners again, or are they being a bit more sector agnostic?
I think a bit of both. So definitely they've seen the need for some investment in manufacturing, and they've picked real sectors within the manufacturing sector, which we'll run you through, and I know Amy and I are going to chat to a bit later. But more broadly, the R&D Tax Incentive, and Beck's going to give us a bit of a one-on-one session shortly, I think, around what it is. But it is a program it's a broad-based entitlement program. So if you're doing innovation in Australia, you can access that. And so where we dovetail really well in the IP world is often when you do innovation here, you create IP. So that's, hence why we're talking today. But it is definitely, they've got a broad-based policy just to let innovation find its place of its own natural volition in the economy, which I sort of like. I think when a government is picking winners, often they're behind where technology is pacing itself. So who would have thought an Airbnb would have come out of, some guys in San Fran putting airbeds in their room? Everybody knows that story. But, Uber was like weird. Everyone's like, oh, I'm not getting in some, we all do it. Like when you think about it, it's not up to the government to pick that. It's up for, it really is the economies that we've got to embrace these technologies. So that's why the R&D Tax Incentive is such a good platform to support not only startups but inbounds into Australia, brings the R&D dollar here. It also just supports business broadly, and thankfully in the budget we've now been given some certainty around that, which is great. It's fantastic.
Excellent. Thank you, Sandy. Well, that's a nice segue to Rebecca. Could you run us through the broad benefits of the R&D tax incentive and the basic eligibility requirements?
Yeah, absolutely. Thanks, Rob. I guess I'll start with the benefits because that's always the exciting bit, talking about the program. But, it really offers, companies to offset some of the cost of doing eligible R&D in Australia through income tax liability. So, currently the tax offset rates are either 43.5% or 38.5%, and they're available for costs incurred on eligible activities, depending on a company's annual aggregated turnover. So when we're talking about the turnover then, so for those with aggregated turnover under 20 million, they can deliver a cash benefit of 43.5%. And for those with turnover, I guess, with more than 20 million, the benefit is still significant at 38.5%. But this means that although you can't get cash back like you can in a refundable if you're under 20 mil, it does offer a tax saving of 8.5%. And that can be immediately if you're tax paying and you have a tax bill, or later on in the future, you can carry it forward. It's important to note that if you're, trading as an individual sole trader or a trust or a trustee or a limited partnership, then you cannot apply. The program is self-assessment and it's jointly administered by AusIndustry and the ATO. In order to register your activities, you need to be an Australian-based business, and you have to submit your R&D application no later than 10 months after your company year end. So I guess as a manufacturer, if you're a company spending money to experiment and solve technical problems or develop new products or services, you might be doing some things that would qualify under the R&D program. There are particular rules and it's defined in the legislation around what is an R&D activity, and there's two different types. They can either be core, which is really, systematic hypothesis-driven experiments that have an unknown outcome, and they're based on those principles of established science, and they're undertaken to generate new knowledge. So for example, it could be the development of a new product again, or a new parts, or automation of a previously manually intensive process. And then there's also supporting R&D activities. So these in themselves are not experimental, but they can directly support those experiments. And in some instances, if you're in a production environment, for example, they need to be for the dominant purpose of supporting that core R&D activity. A common example that I guess we see is around, background research or literary reviews that identify maybe potential methods for the development of a widget, for example.
Can that include patent research, Rebecca?
Yeah, so patent research to some extent, yes. And actually, Rob, that's a really valid point, because there are some exclusions to what can be a core activity. And one of those, I guess, that becomes quite common is around, things like the commercial, legal, and administrative aspects of, I guess, patenting and licensing. So it does need to be quite well defined and understanding what it is that you were doing at the outset. Some of those other exclusions can be things around, complying with statutory requirements or standards, and things like market research. Those types of things are not going to be those core R&D activities that we would normally look to. It's also important, I guess, to note, particularly with manufacturing, that generally you can't claim costs that you incurred overseas or activities that you undertake overseas. There is an exception to this, and you would need to apply in advance for an overseas finding, and that would be assessed upfront by AusIndustry, whether then you can go ahead and claim those costs and activities incurred. And I guess the real key, Rob, is around, it's so crucial that if you are looking to make a claim, you absolutely need to have adequate records to substantiate those eligible activities, and also the cost that you're looking to claim with the program as well.
Thanks, Beck. It still looks like a generous program. Is it capped? Like, is there a maximum amount the government's put in?
Yeah. That's a really good one. So as Sandy was saying, we've just had a historic budget, I guess we can say. And since late 2015, we've had this varying levels of uncertainty around caps on refunds for companies, how the administration of the program is going to work. And so the good news is, I guess, from the budget, for those refundable offset availability, there is no cap on how much you can refund back. They were proposing, I think, previously around 4 million cap, but the good news is that that's no longer in play. Amy, I think you're very well versed on some of the budget changes as well, but just maybe a quick run through on those offset rates. So they're currently what they are, but they will change from 1 July 2021.
Yes, that's absolutely right. And what this table really shows is how it will work in the future. So again, we still have refundable and non-refundable, and the intensity premium is the new, I guess, measure of your R&D expenditure and benefit. So the intensity premium will be calculated by understanding your R&D expenditure over the financial year and then dividing that by your total expenses. Now, without going into the detail of all of the draft bills, there was a lot of outcry from industry, and particularly from the manufacturing industry, through the draft legislation process, because of course manufacturing companies tend to have quite high operating costs, so that would drive down your R&D premium. The best thing about what has come out of the budget is that for non-refundable entities, essentially they're fixing a minimum of a 8.5% premium if you have under a 2% R&D intensity. And then for entities with over a 2% R&D intensity premium, you can actually get up to 16.5% in benefit. And that's really, really great, because the draft bills were going to reduce that significantly, and it was going to have adverse impacts, particularly for the manufacturing sector. So the result of the budget and the additional spending on R&D is fantastic for confidence. We've had a lot of manufacturing clients, because of the uncertainty, thought maybe they wouldn't go ahead with R&D claims in the future, whereas now they can confidently plan their R&D in the future, and they can have confidence that they will get some money back, which is absolutely fantastic. And, you know, like Beck said, you know, taking out the cap for the refundable, improving the administration of the program, this is really groundbreaking. There are a couple of additional changes as well. For instance, as part of the improved administration, they will actually publish R&D expenditure for companies and make that publicly available, which is interesting. But on the whole, just taking a step back, this is fantastic for industry. It's fantastic for our manufacturing clients, and we're so excited to be working with this in the future.
Excellent, thanks, both Beck and Amy. And I can see that the 8.5% comes from the difference, and the 16.5 comes from the difference between that benefit and the corporate tax rate.
Yes.
Just to prove I can still do my maths.
It does make it a little bit easier. I guess it gives that certainty again. The calculation becomes a little more simple when you just that plus that. That's correct, Rob.
Thanks. That's great, Beck. So Amy, over to you. Can you give some examples of the form that R&D takes in the manufacturing sector?
Absolutely. And look, Robert, it's very broad. I think something that we find, particularly with manufacturing clients that we go and we see and we talk about their R&D, is that traditionally their R&D focus or their version of R&D is very focused on product development. But under the tax legislation requirements, it's actually a lot broader than just product development. So we actually find for manufacturing clients, the majority of their R&D comes from process improvement, efficiencies, improving product quality at higher throughput. If there's defects within certain products, how to remedy those defects without compromising other product quality attributes or without compromising throughput. So it is really broad. And of course, now we're seeing some really exciting R&D come out with, I guess, Industry 4.0, so more automation, greater use of robotics, Internet of Things. So now we're really seeing the merger of the digital sphere and the manufacturing sphere. And I think we'll see more of that in the future. But I guess the key takeaway here is that it's not just new product development, and we like to cast the net a lot broader. And Beck, I know you work with a lot of manufacturing clients as well. Do you have anything to add?
No, I think, you know, that's so true, Amy. It is a broad area. I think one thing I often say is if you're a little bit stuck as well, there are some good guidance materials on Oz Industries website, you know, and they do have one in particular that is for the manufacturing sector, and it does talk, I guess, a bit about blurring that line between manufacturing and also that digital influence as well. And they have some good examples around, you know, the R&D rules and how that might apply to particular activities. And again, they're just examples and it doesn't apply to everyone. But I guess, you know, an example that might be there is around, you know, a toy manufacturing company that's, you know, developing radio controlled helicopters, and they're looking to, you know, test the performance and the battery life of a prototype. That's just one type of thing where we can start to look for R&D, but it is so broad. And there is a lot of guidance out there, but it's good to start talking about it and documenting it at the outset, so there it makes it a lot easier when you look to access the program.
So that breadth you're speaking about, would sort of suggest to me that possibly a lot of manufacturing companies underclaim on their R&D tax benefit because they don't quite appreciate what comes in. Would that be right? That's just a question generally to the panelists.
Absolutely, that's what we normally find with clients is when we go in, if they have been claiming R&D before, it's really just capturing the new product development rather than more broadly capturing the process improvement, quality improvement, throughput improvement. And really, going back to what Sandy was talking about before around innovation, driving the economy through the recession, a focus on efficiency in manufacturing is going to be so important, particularly as we bring more manufacturing back to Australia. We have quite high costs of labour in Australia, so to be able to do that in a way that is very economically efficient and viable in the future will mean that I think that as we go forward, we'll find more and more R&D related more to efficiency improvements, Internet of Things, automation.
Yeah, okay, interesting. And we're seeing the same trend. I mean, I think there's convergence of sort of digital with what you might call traditional hardcore machinery, you know, putting sensors in things, having, you know, machinery internet enabled, remote controlled, robotics, etc. You know, is generating patentable IP. But again, often that can be overlooked. People don't realise that, you know, these combinations can be patentable as well. So look, thanks so much for that. I'm going to throw this next question to either Sandy or Beck, maybe Sandy to start with. Yep. So we've certainly seen over the past 20 years a trend of Australian manufacturing relocating a lot of their operations or manufacturing overseas. How do you see the government's, you know, current initiative as addressing this issue? Any observations around that?
Yeah, thanks, Rob. We are seeing some really positive change here, and one of the things that the government announced in the federal budget was not only some, you know, injection of funding into the R&D Tax Incentive being that main platform for support, but also made some big statements around many packages actually, but one was around manufacturing, and it was the Modern Manufacturing Initiative, and they undertook that they would. They announced a $1.3 billion investment of funding to this strategy over the next sort of 12 to 18 months. And it'll be a combination, I think, of different types of support. But one that's really interesting that is about to open is the Manufacturing Modernisation Fund. A lot of M's in there, and it's a program that will open shortly. It already has had one round of applications, and actually Grant Thornton, we've had some experience in doing these applications. We have a grant specialist in our innovation incentives team, but this is a real signal by the government that they want to really firmly establish manufacturing back in Australia in the next decade. And as Amy and Beck said, that could look in all sorts of different sectors, but predominantly this fund, the first fund that I'm going to talk you through, which is the MMF, it provides $100,000 to $1 million on a 3-to-1 basis. Now, remember, grants are different to the R&D tax incentive because they're prospective. So it's for future projects. So if you're thinking about doing some capital investment or something like that, and it's support for transformative investments in technologies and processes. So you're looking at flagship sort of R&D here that you really want to get that sort of injection of some cash and support. Now, the fund is really anticipated at focusing on particular sectors. So the government has decided these are the sectors they really want to see thrive in Australia. And there's 6 of them. And they include resources, technology and critical minerals processing, food and bev, medical products, no surprise, recycling and clean energy, defence and space. So if you're a company that operates in one of those priority areas, I think there's definitely an opportunity there for you to pick up, and you're going to do some investment over the next 12 months. We're really suggesting now that corporates think about a top-down strategy in approaching grants. The thing with grants is they're hard. It's a broad landscape. There's a lot around. So it's understanding what's coming up and whether it's applicable to you and your company. So it's an ideal time now to start thinking about your top-down strategy. There's no doubt the boards are very well connected around getting access to this cash and support. I mean, clearly we talk to companies every day, and people are struggling out there around just a downturn. And whilst we heard about things like JobSeeker and JobKeeper, this is another critical package that the government has put out into the economy to stimulate growth. A couple of other things of that $1.3 billion is you're going to see, I think, more packages get released as the months go on. They're also looking at supply chain resilience. So where there's some vulnerabilities around medicines, food, chemicals, plastics, how are we going to address these? So what do we need to do? And I think you'll hear the government seek to collaborate with industry on how to best do this. And they've allocated over $100 million to supply chain issues. They also want to really collaborate with industry, so looking to develop industry-led roadmaps. So if you hear about these programs and if you want to know more detail, do get in touch with us, because we can talk to you around how the government is going to use some road mapping, and they're looking to prepare these by April. So if you want to be involved in that process, please reach out and we can connect you through to government. We've got a really good track record with grants at Grant Thornton. It's a competitive process, so you want to put your best foot forward. It is quite detailed, unlike the R&D Tax Incentive, which is also detailed, but it's an entitlement. So you remember here that this one is more a competitive basis, but we've been able to successfully support companies in gaining access. And in the last round of the MMF, for example, the companies that we supported, they all got their grants. So I think do get some advice. It's one thing that, to think about doing it yourself, but as it's competitive, you really want to and they're looking for transformative technologies and process developments. Have a think about how to do that. But there's not only been federal government initiatives, and I know Beck was going to cover off, there's absolutely, the time is right to look around and see what's funding supports out there for manufacturing. And Beck, I think you're just going to cover off on a really recent announcement.
Yeah, just a really quick one, I guess, on the Victorian budget. There was an, advanced manufacturing again. I think there's around 60 million for manufacturing and industry development fund, which I guess is again supporting that manufacturing capability and securing those opportunities to reshore and onshore manufacturing, particularly in Victoria, which is always so welcomed. There was also, I think, a $40 million announcement around industry recovery and growth fund, and that particularly was targeted at high growth sectors like food manufacturing and pharmaceuticals. And then I think one that was well publicised was around, that $20 million investment to establish that medtech manufacturing centre in Victoria as well. So again, it's just really highlighting the manufacturing and the innovation that the government is supporting and wanting to happen here in Australia.
Yes, I think what we're suggesting to you is really have a think about having a grant strategy. It is really, if the time is now to do it. I know a lot of people sort of ask questions and we get lots of calls around what grants are out there, but now it's take a strategic view on this, and don't expect your technical teams to bubble them up after they've heard about them through their peer networks, etc., which is generally historically how grants get, word of mouth. But now what we're seeing is having this top-down approach. Boards really like it. The C-suite really like it. They want to know that you're across these opportunities, and it unlocks cash. Cash at the moment is tight.
Yeah, brilliant. It really dovetails into the subtitle of our presentation. If you're not alive to the possibility, you'll miss it when it happens.
Yeah, that's right.
A big bucket of money, 1.3 billion over 18 months. And it would be a shame that, our industry didn't take the opportunity to avail it. Just one quick question on that. What would be an example under that Modern Manufacturing Fund of an example where you could secure a grant? Would it be modernising a piece of equipment, or digitising, or so some sort of capital works in that?
Yes. Yeah. So I think you've got to always think about it's got to be a capital investment. So we're looking between $100,000 to $1 million of support, so up to $3 million of expenditure that you might be thinking of spending. So something that will transform your process, that is going to take it to the next level. So something you may have been thinking about that you just don't, you might have 2/3 of the funding, but you need that at 1/3 injection. And that to me is, it's the things that, so as you put your CapEx strategy together, and you may have already done that, you probably have already for, definitely you would have done for this income year, but as you go to do it for FY21, what is it that you're looking to develop and improve in the business? But similarly, go back and look at that CapEx piece and see what are we doing around the business at the moment in this income year, because a round is going to open, we understand, either before Christmas or just afterwards. So, if you are about to embark on something, because it is prospective, there is this money that, this round is about to open. We don't know the exact timing, and that's the thing with grants. It will get announced when they will open it. So we'll certainly, happy to keep you abreast of that, but we don't quite know that at this point. But it will be in the next, 4 to 8 weeks.
Yeah, I do like that idea of having a grant strategy.
Yeah.
Very good suggestion.
Yeah.
So, as you know, I'm somebody that works in intellectual property, and I see the value of protecting it. I mean, that's sort of part of my raison d'etre. And I guess really I'm interested in your thoughts on the importance of an intellectual property strategy as part of an R&D strategy, and how you see that dovetailing in with innovation incentives and the R&D Tax Incentive program.
Thanks, Robert. I'll kick off, and I know Amy's got some thoughts on this too. So really good question, because to be honest, it's I think a bit of a blind spot around how everything interacts in relation to innovation. So you'll have areas of a company that will focus on IP protection and patents, and then you'll have the R&D team or the operational team just every day doing R&D and not really even realising that what they're developing is some IP, some soft IP or a hard IP. One thing that was a real eye-opener for me, I was a partner in a big firm for 15 years, and then I joined the IP firm, working with Rob and the team, obviously at Griffith Hack. And what was really interesting was all of the issues that come up in the patent sector. And it's really not that well known around the Australian business economy, I don't think. My experiences as 15 years as a partner, I certainly didn't see it. And it's the importance of protecting your IP. So what we've done at Grant Thornton is we've really moulded the two models together, and we are working a little bit with you, as you know, Rob, with Griffith Hack, where we're saying to corporates, look, don't just think about the compliance of filling out the R&D form. There's more to it than that. You're creating IP here. How do you protect it? How do you know, have you got the freedom to operate? So, and some people just don't consider this. If you don't want to patent it, have you thought about trade secrets? I know that's something that your colleagues are really passionate about, Rob. And managing your IP, almost like having an IP strategy, which I know some big corporates do, but really the SMEs, so I'm talking about anyone who's in the startups get their head around, I think, a lot that they're developing some IPs, but it's the SME space where we see this whole complementary working with the IP landscape and why it's so important. Amy, what's your perspectives?
Look, Sandy, I completely agree with everything you said. I think there are quite a few overlaps with R&D and some of the other programs that we offer. For R&D, obviously, it's a self-assessment tax regime. So if the regulators do come knocking, you need to have documentation to support your claim. So a lot of the time, freedom to operate searches, patent filings, that can really help bolster the strength of your documentation and the robustness of your R&D claim. Aside from R&D, we also offer a program called Export Market Development Grant. And that's essentially the government helping companies to subsidise marketing activities overseas. And patent costs are eligible for overseas filing. So not filing patents in Australia, but for trademark and patent filings overseas outside of Australia, New Zealand and North Korea, those are all eligible costs under that program. So we do see a little bit of overlap there. But I think more broadly as well, your point, Sandy, around having an IP strategy and someone who manages the IP in a company is just so important, not just to recognise the value of your intangible assets, but also even extending to a knowledge management piece. In our job, we're very fortunate because we get to go into companies at the end of the financial year and hear about all the amazing R&D they've done within that year. But if we walk into the company at the end of the year and the person who was responsible for all the R&D has left, then it makes it very difficult to put a claim together and to substantiate that claim. And just from a knowledge management of your intellectual assets perspective, it's very important for a company to understand where the soft IP lies in a company and how you can protect that, as well as the patents and the trademarking.
Yeah, I think Amy's right. The biggest leakage we see is not actually, everyone worries about data hacking and people hacking into your data. It's actually when people leave or, you lose all of that IP that they take with them. So there's something around a trade secret framework. There's also issues around just how do you, how do you track your activities and how you, what you done work in all those sort of areas, but we've also worked with you, Rob. So keen to ask you some questions around the importance of, where do you see the importance of IP in all of this? So what does it, when you're looking to your clients?
I can just speak of, without mentioning names, a client that you referred to us a while ago, and they had developed a new product. And when I say developed a new product, they'd designed it and developed it and 3D printed prototypes and tested them. And then you guys encouraged them just to have a look at the IP landscape, just to be sure. And what we actually found was there was a lot of very, very, very close patents. Now, we were able to ultimately give them the tick and say, you do have freedom to operate. But it was certainly a close call. And it was amazing that consideration came up so late in the piece.
Yeah. And only as we were talking through the R&D activities that we sort of flagged to say, how did you, what are your initial investigations here? What have you done? I know we've searched around, we've been to some seminars offshore, this is pre-COVID obviously, and we've done our investigations and we know and it's like, well, we think you should do a little bit more. And it's about that second piece that you're talking about. It's so critical to not getting what happens if you infringe on a patent? I know this is sort of basic 101, but this is something I really learned quite quickly when I joined the IP group. What's the risk? Because I don't know if all businesses really understand that risk.
Yeah, that's right. And I mean, part of it is, I think you just say it's a good risk management exercise anyway, discharging that risk before making the significant investments. I think is good practice management. And again, just those points you raise around know-how. It staggers me at how often that just walks out the door when a key employee leaves or gets sick. We had a recent example with a client where they were operating a very, very large piece of equipment, and this person was just reliable. They turned up 52 weeks a year, and operated this bit of, even when they were on holidays, and then they suddenly got sick. They were off for 3 months, and this large piece of equipment got shut down because it had never been documented. And as you say, that just part of that knowledge management exercise is having good documentation around your processes and your systems, and that strengthens your soft IP.
Yeah. So I think the thing that we do is around that whole cycle of innovation now. So what's different about how we work is we do work with the IP firms like, with Griffith Hack, which is great, and really try and understand what a client is seeking or a corporate seeking to achieve and come up with the issues that they should think about as they work around that cycle of innovation. So is it your tax strategy? Is it, your debt or your equity? Is it, protecting your IP? Have you thought about patents? Have you thought about the fact that you might be infringing on patents? Have you done those searches? These are all, have you, to incentivize employees to stay, have you thought about employee share schemes? Have you thought about how you're protecting your IP, from hacking, but also from people leaving, and exactly that. I've got a few examples just like that, Rob. The other thing is, what's your exit strategy? What are you thinking about? What do you want to do? Where are you taking this business? And we can sort of talk to you in all of those spheres. So are you looking to expand offshore? That's really important. Have you set up the structure so you can do that? So there's all these myriad of things. And I think, and to touch on too, have you thought about working with the public sector? How are you doing that? So we're seeing now a lot of collaboration via CRC programs, but also more broadly of corporates looking to find appropriate partners, and they often come to us. They need an expert witness, so someone who can actually opine to say what they're doing is innovative. And the regulator who regulates the program expects that. So that's a real skill that I think the public sector can offer corporates in Australia, which is to give them that objective view of what are they doing, and is it really world first? Is it innovative? Is it risky? What are you doing? So, there's so many things to think about. And I know we're, bringing it back to manufacturing, it's great to see that we're looking now to improve our manufacturing sector here, and expand our IP in this space over the coming sort of year to 5 years. I think the government has made absolutely the right decision, which is great for our economy. I mean, this is the one thing to do is, of all years, really go back to the budget and also think about what's available for you. So what incentives have been released? Talk to your tax accountant, talk to us, talk to Rob, I think, around, how do I protect the IP we're developing? What support can I get for it? What programs are out there? This is, if normally you see every firm put out a budget briefing and, you read it and you think, oh, yeah, and the paper's all full of it. The Daily Telly writes out all that. They do little tables and tell you what's eligible and what you're going to get. But there was so much in that budget. It was a historical budget in October, and Beck just raised the Victorian one. There was a New South Wales one recently. All of them have incentive packages in it to stimulate the economy at the moment. This is a real pro-business environment, and public sector to generate innovation here, because it's well known that innovation will kickstart us out of this recession. I think the UK recently pumped £22 billion into their R&D incentive programs. So you think about that, I mean, that's a massive investment and injection of funds. So it's happening all over the world. People know that innovation will get us out of this. So I think that's a really positive step the government has made.
Fantastic. Thank you so much for that. We've got some time for questions. Gemma, do we have any questions from the audience?
Not yet, but we have a few more minutes left until we finish up today. So please feel free to put in your questions and we'll ask the panel. Otherwise, we do have their emails available. Steph, do you mind popping up? Yep, so if anything doesn't get answered today, we have Rob, Sandy, Beck and Amy's contact details there, and you can direct your questions to them. So we'll just give it a couple more minutes.
Okay, thanks for that. So while we're waiting for that, I just thought it might be good just to get each of you just to summarise what you've kind of done that already, Sandy, but summarise what you entered today. Just a few key takeaways that people should take from today's webinar.
So just from me, a top-down grant strategy. Have a think about what's out there. Really explore it with your advisor or with us. Happy to help. Think about innovation more holistically, not just as a R&D format filling exercise. There's much more to it than that. Other perspectives, Beck?
Yeah, I think, talking about the R&D program, which is, where I spend a lot of my time, but it is having that broader conversation, as you're saying, Sandy, and also doing it in year, because that does mean you can pick up those things that, that there might be IP issues there, those freedom to operate things. That's things we can talk about in real time, and not, at the end of the year when you're trying to pull a claim together that things might be missed, and there's a whole raft of issues that could come with that. So it really is about being proactive, doing things in year, in real time, that helps you document those processes, and then it builds up, your whole innovation strategy by doing that as well. It's not just R&D.
Excellent. And Amy?
Look, I would just say the key takeaway is that we now have certainty for R&D tax, and like Sandy said, a top-down approach for grants. R&D can now be planned proactively as well. We have certainty to really think about what you're doing as a manufacturer more broadly, not just new product development, but to really look at the wide scope of activities you're conducting and what could be claimable. And again, a real focus on IP management and strategy.
That's excellent. So I think the word of the day there is proactive. As you know, we're about to head into the Christmas break, and January, as you know, is a quiet time generally in business, a quiet time of the year. Strikes me that would be an excellent time for companies just to sit down and think about these issues and plan when they've got a little bit of free time, plan for the year ahead, and as you say, develop both an R&D tax and a grant strategy going forward.
Yeah, and an IP one, Rob. I think don't have that blind spot around. Not you, but more broadly, I know you don't, but more around. I think there's really traditional industries that know about IP and know how to protect it and know what they're doing, and really strikes me is when we go out and talk to corporates that a lot of people just don't consider that they've got how to manage it, how to navigate through that IP. And now more than ever, it moves so rapidly. And, if you want to monetize it and get it out and, be able to get offshore and get that growth cycle going, it is about understanding what soft IP you've got and how do you protect it. And there's no doubt. And that's what Rob's fantastic at, I know, from having worked together. So it's definitely that whole complementary piece here. And that's certainly what we think about. And it really, we are finding with corporates really thinking about that more broadly now, beyond compliance. So it's whilst a recession is very, very challenging, it creates opportunity. I mean, there's no doubt. And there's a lot of stimulus money out there. And I definitely, we really encourage people to investigate what's available for them. So, we appreciate the opportunity of being able to have a chat today, Rob.
Thank you for sharing that with us. Any final questions there, Gemma, from the floor?
Yes, so we have a question here. As a small business owner / inventor developing a toy for educational benefits and looking to manufacture in Australia, is there a grant that could apply to my industry? This person is in the startup stage.
Well, definitely I'd look at the R&D Tax Incentive as a start. There potentially is other grants that you could access, and there is commercialisation grants. There's a whole raft, and again, it goes to this landscape. So happy to chat to you offline about those opportunities, because definitely there's some things there around support that you can get. If you're looking to market it offshore, there's the EMDG program. So don't forget that program, which actually closes on Monday for the FY20 year, but because Grant Thornton, we have QIP status, means we can lodge until March next year for the FY20 year. So do come and reach out to us. It's not too late. So if you Google EMDG and say, oh, it's closing, it's too late. It's not. And we're doing claims for people with just 2 invoices. So it very much is just about what you've spent. If you're less than 15 mil turnover, come and talk to us about that program, for example.
QIP sounds even more superior to VIP.
I know.
You see, there's another couple of questions. There's one from Jennifer Hollins. Any other spaces you recommend to keep your eye on for grant information other than Grant Connect?
I think, come to us first and foremost. Grant Thornton, we have a strong grants business. There isn't one space. That's the issue and the challenge with it. Unfortunately, I'd love to tell you there was, but there's just not. Beck?
No, it's so vast and so wide, and there's the state-based funding, and then there's federal funding. So absolutely, get in touch, Jennifer. We're happy to sort of talk you through those things. But it's hard for everyone to have a central source of the information that's available. It does change, as Sandy said too. They open and close quite quickly, and it is very competitive. So we can share with you as much as we do keep on top of that, our grants team in particular. But yeah, it is a bit of a challenge with finding what's out there as well.
Yeah, it is.
Thank you. There's another question here. I'm a small business. Do you have an avenue for other companies to invest in my IP? That comes from Douglas Donaldson.
Yes, we do. In fact, I mean, not personally, no, but what we can do is I'm working with, within the Grant Thornton community. I've recently worked with another corporate that's not just looking for investment, so making the decision around equity versus debt, and also, and also government support. So there's sort of a lot of angles to think about. So you can get access to cash via the R&D Tax Incentive if you've got eligible activities that fall within the definition. That's really important. You can also, look for equity shareholders, but you want to find the right type of person or the right type of investor. You might want some debt. There's alternative debt providers out in the community now that, MES debt and as beyond banks, right? So there's lots of opportunities. We've got a really strong corporate finance practice, Cam Bacon, in our team. I've worked with him for a client who is in an ethical area, sort of developing an alternative food. So looking for an investor, but the right sort of investor. So we work with clients to try and link you up and provide that sort of investment link. So if you are interested and are looking for that, we can certainly put you in touch with Cam. He's fantastic.
Thanks for that. And I think there's also the angel investment community, which
absolutely. So Cam will sort of, and our corporate finance team, depending on where you are, will be able to help you with that.
Excellent. Thank you for that. There's another question here from Kim regarding the EMDG. Is turnover taken on a group company basis, or could we apply if we had a US entity with turnover less than 50 million?
Anyway.
Yeah, that's a great question. Yeah. Look, we would really need to take a closer look at your company structure to advise on that. But generally, it's taken on a company basis, so we would only have to look at the Australian entity. But as I said, get in touch and we can have a more detailed discussion about your company structure to understand what rules apply.
Thank you for that, Amy. I see there's a question here from Chris Hornby. Cash flow can be an issue when it comes to advice, particularly for startups. How do advisory firms like Griffith Hack or Grant Thornton help manufacturers navigate this issue when it comes to engaging a provider like us? Sometimes businesses opt out because the investment for advice seems too high.
Now, look, that's absolutely a question we get asked all the time, and a very good one. And we really work with you to help you unlock cash. So with the MDG program, we have various fee options where we work at, as you get the grant, we get paid our fees. So there's all sorts of things. So definitely we work in this mid-market space at Grant Thornton, so we understand those cash-tight challenges. We're much more hands-on. We can definitely work through that sort of cash flow issue that you have. So, do come and talk to us around fee arrangements, because something we do quite commonly around post getting a refund, or, like everyone, we're running a business, but we do come up with arrangements that work that, from a cash flow point of view. What about you, Rob? What do you do in the IP?
Yes, I think that's a good question. So I think firstly, you can't really avoid that if you're talking about preparing and filing a patent application. You can't really avoid that initial cost just to get the priority date established. But we do work with the size of client and try to match the right professional to them, so that we can keep the costs controlled and contained. We do invest a bit in our clients at that point in time too. So we very rarely recuperate the time we spend in getting that patent application established. Having said that, one of the things we're really keen on is getting our clients hooked up with the right investors, the right programs, the right incentives early on. So I always say it's so much better before you engage on that international patent filing program, if you can use other people's money, be that government money, government grants, investors, and so on, partners. So as much as you possibly can to share and have defraying of those costs via other sources. So they're some of the things we do try and work with our clients to assist. There's one further question, probably final question I see here from Jennifer Hollins. She says, do you see patient investment boosting in Australia? I assume by that she means, long-term, I think, patient in Australia.
Absolutely. I think the economy here, my view on this is definitely we're seeing people and corporates, really look at the investment horizon. I certainly see, for example, the alternative capital space really expanding. Like, that's just something that I've really noticed, not just going to banks now, but people going to different places to get investment, people looking at projects from a different lens. I sit on a couple of boards outside of Grant Thornton not-for-profits, and definitely we see that appetite for investment now in Australia is very strong, which is fantastic and across many sectors. So I think there is a lot of appetite to invest, and also then to protect that investment. So then, if you're going to do some IP development, then think about protecting it.
Thank you. And there's finally a thank you from Edison Mudziwa. Thank you all. This has been a real eye-opener for me, and I know there is opportunity for my innovation.
Oh, that's nice. Thank you.
So I think that's all the questions dealt with. So probably just remains for me to thank our panelists today. Excellent, really insightful, great presentation, a lot of information in a short amount of time, and some really good takeaways, I think, for our audience today. Just to mention to all our attendees and guests, this has been recorded, this session. We're going to make it available on our website. You can get a copy of our slides from our marketing team. And just a final thank you to all our panelists today. And I wish everybody a safe and happy and COVID-free Christmas and New Year period. So again, that ends our seminar, and thank you.
Thank you, Rob.